Chris, China's bond market has been under strain due to a series of defaults lately, and some of them are coming from surprising parts of the market. What's going on?
That's right, Heidi. So, China only a few years back started allowing defaults. And for a while, investors thought they got a handle on which companies were the ones to, keep an eye out for in particular. But this year, as we've seen greater strains throughout the market, with China trying to tamp down leverage in the financial system, borrowing costs have gone up, premiums have gone up, and there have been some defaults in the past several weeks from companies that investors are a little surprised at. These are publicly listed companies. These are companies that have public stock listings. And so investors had thought that these guys are, held to a greater a greater standard of transparency. They were thought to have better corporate governance because they have that, they have to open their books in connection with public listings. But 4 out of the 5 first-time defaulters so far this year are, in fact, publicly listed companies. And that's a big surprise to investors.
Chris, how serious really is this? Is it the beginning of a major collapse in what is, after, I think, the world's 3rd biggest bond market?
That's right. Well, Fitch put out a report this week saying that they expect further defaults and greater strains to continue throughout the year. They also said that, the Chinese authorities are unlikely to allow a systemically important borrower to default, say a big property developer or a major local government financing vehicle. But with those exceptions, we're likely to see further turmoil, and investors are saying it's best to keep, in the higher rated bonds, in government bonds. You want to be wary of those that, contain bigger risk.